The week's end top stories at NBR, the chair of Tesla on clean car standards before the government. Those owed money after the collapse of STA could be waiting longer. Analysts remain broadly optimistic about PUSHPAY prospects, and there's more coming right up. Kia ora and welcome to NBR This Week. We start with a wrap of the end of the week's top business stories from the authority in New Zealand business news since 1970, nbr.co.nz. Then we'll take a look back at the top NBR Today stories from the past week. I'm Paul Brennan. Thanks again for joining us. The High Court has given expat businessman George KERR until 5 p.m. on Tuesday to provide documents to receivers in compliance with court orders or face a hearing for contempt of court. Receivers of KERR's company Pine Holdings, which owes the BNZ $67.7 million, have been seeking documents from KERR clarifying its stake in former NZX-listed investment company Pine Gould Corporation. At a virtual hearing this morning before Justice Gerard van Bohemen, Receivers Counsel Janko Marcetic said his application sought a declaration that KERR had not complied with particular orders of the court, while KERR's counsel Greg Blanchard QC had indicated the documents would be provided by the end of Tuesday next week. Marcetic said they'd heard such promises before. If the documents did not arrive as promised by Tuesday, there should be an immediate court appointment to set a date for a contempt of court hearing, Marcetic said. The chair of Tesla has told the APEC CEO Summit 2021 the clean car standards before the New Zealand government at present will put the country's fleet among the safest, cleanest vehicle fleets in the world. Australian Robin Denholm, who is also an operating partner at Blackbird Ventures, was speaking to the summit on the same day vehicle manufacturers were submitting on New Zealand's Land Transport Clean Vehicles Amendment Bill.
Our host nation, New Zealand, is a great example of leadership. EV sales have rocketed up from about 3% to 12% of new light vehicle sales in just a few months since the New Zealand government introduced a world-class clean car discount scheme earlier this year.
Chair of Tesla, Robin Denholm there. Those owed money after the collapse of STA Travel New Zealand look set to be waiting a bit longer after a ruling in the High Court this morning, Friday, said that more legal arguments need to be presented. Liquidators had applied for a ruling from the court over how they should distribute $420,000 in funds received from the International Air Travel Association, IATA, and a small number of travel vendors. The money can either go to affected customers that have been identified or, through the normal process, the preferential creditors in order of priority. Liquidators Colin Owens and David Webb have so far simply stated there are varying claims on the $428,000 currently held in trust and been agnostic about which way the court decided. However, they're keen to get a decision before December 31st, 2021. PushPay's soft first-half results may have spooked the market this week, but analysts remain broadly optimistic about its prospects. Shares in the dual-listed church payment and management software company fell nearly 20% after it reported slower-than-expected growth and flagged rising costs due to IT worker shortages. The company's revenue in the 6 months ended September 30 increased 9% to US $93.5 million, while net profit rose to US $19.1 million from US $13.4 million in the same period last year. This came as total processing volumes increased to US $3.5 billion from $3.2 billion, although the company conceded that growth in the first quarter of the financial year had been lower than expected. Auckland high-tech firm Rakon has again upgraded its earnings guidance despite continued supply volatility and cost pressures in the global electronics industry. The NZX-listed company said today, Friday, it now expected its underlying EBITDA in the year ending March 31st, 2022, to be between 44 and 49 million. That was up on guidance of between 39 and 44 million provided in late September, itself an upgrade on guidance provided in April of 27 to 32 million. The company has said it will likely pay its first dividend in March 2022 on the back of its improving financial performance. Rakon Managing Director Brent Robinson said today, Friday, that the earnings upgrade reflected the certainty of 2 more months of good performance, a strong order book for the rest of the year, and some reduced supply chain risk. Those are our top stories as we head into the weekend, the full versions of which, along with all our breaking business news, columns and opinion, are at nbr.co.nz right now. This is NBR This Week, a brief look back now at the week's top stories from our daily video business news bulletin NBR Today. On Monday, a suggestion to axe sponsored visas. The head of the country's largest employer group is welcoming the suggestion made in a new Productivity Commission report to remove visa conditions tying temporary migrants to a specific employer. The report, Immigration Fit for the Future, Preliminary Findings and Recommendations, released today, Monday, continues the work of the Commission into immigration and how the country's immigration settings either help or hinder government productivity and well-being objectives. Joining the NBR's Dita Deboni was Productivity Commissioner Dr. Ganesh.
It's not all migrants, but there are a certain category of migrants that come in that are tied to employment to one specific employer. And that has, from what we've heard and from our research, at certain times that does set up, I suppose, the potential for exploitation of people.
It's NBR This Week, the week's top stories from our daily video business news bulletin, NBR Today, from Tuesday, forcing consolidation in New Zealand's vehicle sales market. Car dealer group Armstrongs wants to use funds from a potential IPO to force consolidation in New Zealand's fragmented market, and the rise of electric vehicles and car maker-to-consumer sales won't slow it down. The company, founded in 1993 by Rick Armstrong, announced this morning, Tuesday, it had hired investment banks Jarden and UBS to help plan a possible float on the NZX and ASX. A non-deal roadshow is underway to gauge investor appetite as part of a review of the company's capital structure. Armstrong would likely sell down his 100% ownership, although maintain a majority, Chief Executive Troy Kennedy told NBR after speaking with investors alongside Armstrong. This is NBR This Week, the past week's top 5 business stories from NBR Today. From Wednesday, a big deal for WETA Digital. WETA Digital has agreed a deal to sell its tools, pipeline, technology and engineering talent to NYSE-listed Unity Software for US $1.625 billion or 2.3 billion Kiwi in cash and shares. WETA Digital is majority-owned by NBR lister Sir Peter Jackson and Dame Fran Walsh. Former Facebook president Sean Parker is also a significant shareholder. The deal also represents a big bonus for 8% shareholder and WETA director Joe Lettieri, a multiple Academy Award winner involved in hit movies including Lord of the Rings, Dawn of the Planet of the Apes and Avatar. In a statement, Jackson said WETA Digital's tools, offering aspiring creatives access to WETA Digital's technology, will be nothing short of game-changing, and Unity is just the company to bring this vision to life. WETA's visual effects team will continue as a standalone entity known as WETA FX and is expected to become Unity's largest customer in media and entertainment. WETA FX will continue to be majority-owned by Jackson. This is NBR This Week, a brief look back at the week's top stories from our daily business NBR Today news bulletin. From Thursday, MAINFREIGHT'S Managing Director on opening borders. Mainfreight Managing Director Don Braid is frustrated by ongoing COVID-19 restrictions and believes the time to reopen the Auckland border is upon us, with the decision on international borders also required imminently. I think we have to learn to live with this virus in our community, Braid told the NBR in the wake of the release of another set of stellar half-year results this morning, Thursday. The NZX-listed global freight and logistics company disclosed a 41% year-on-year increase in overall revenue and a 79% hike in net profit for the half-year to the end of September. Mainfreight reported revenue of $2.27 billion and net profit of $130.8 million for the 6-month period and declared a tasty Christmas present for investors, an interim dividend of 55 cents per share payable on December 17, an increase of 83.3%. This is NBR This Week. Now we're up to Friday's top story. Vodafone NZ is exploring network capital release options, given the strong valuations witnessed in recent transactions, particularly in Australia, according to INFRATIL'S CEO Jason Boyes, whose company owes a 50% stake in the telco. Boyes said during a presentation accompanying the NZX-listed infrastructure investors' half-year results release this morning, Friday, we're seeing a lot of investor interest in the private markets and digital infrastructure, particularly mobile towers, with a lot of transactions recently and very strong valuations. From that, there's a lot of new ownership and operating models that are emerging. You've been watching our review of the week's top 5 NBR Today stories. You can find the full versions of those stories and more, along with all our breaking business news, columns and opinion at nbr.co.nz right now. Saturday at NBR, in Fact or Fiction, Brent Edwards and Grant Walker debate Freedom Day and a virtual APEC. While on Sunday, Neville Gibson's weekly book review looks at Auckland's history and stories of what lies beneath the ground. I'm Paul Brennan. Thanks for watching NBR this week. Have a great weekend. I look forward to being with you again from Monday for NBR Today.